How to write off your health expenses to pay less taxes. We're talking about gym memberships, massages, chiropractic care, doctor visits, dentist visits, or even the toothpaste you buy from CVS.
You get them bacon toothpaste.
Yes, you can write all of these things off under the right structure, but 99% of people are completely unaware of how you can actually accomplish this. Or they think the only way they can write off medical expenses is with the itemized deduction. But that is actually one of the last options I would consider if I wanted to maximize my tax savings. So today you are going to learn the different ways you can write off your health expenses, and most importantly, the best way to do this to save the most amount of money in taxes. My name is Sherman, the CPA, and I tax plan every day for high income business owners at mycpacoach.com. I have successfully helped countless people write off all different types of health expenses, from their family's health insurance to the childbirth of a new family member or the care of an elderly parent. So if you already incur health expenses or plan to have them at some point in the future, learning the best ways to write them off can save you thousands of dollars in taxes. And all you have to do is watch this short video until the end. So let's go ahead and get right into it. All right, so let's start with the most basic way to write off your health expenses, the itemized deduction. Now, there are two big problems with the itemized deduction, and it is very important that you understand them. So let's get into it. So the itemized deduction allows you to deduct certain medical and dental expenses from your taxable income. This includes insurance premiums, medicine, doctors, dentists, or other specialist doctors, medical procedures, and even weight loss programs, and so much more. Now, while this sounds great, most people do not actually take the itemized deduction at all, which means they fail to write off these expenses. Now, the reason they don't write it off is due to two primary limitations with the itemized deduction. Number one, you can only deduct medical expenses that exceeds 7.5% of your adjusted gross income, which just means the more income you earn, the harder it will be to use the itemized deduction. That is, unless your medical expenses rise with your income. But in my practice, I found the opposite to be true. My wealthiest clients tend to be in fairly good health, which makes this limitation very unattractive for them. For example, if you earn $350,000 in income, you would only be able to write off medical expenses that exceed $26,000. Whereas if you earned $40,000 per year, you would be able to write off medical expenses that exceed $3,000. So that's the first problem. The more income you earn, the harder it is to use the itemized deduction. Now, the second problem is that the standard deduction is typically more beneficial than the itemized deduction altogether. Most people use the standard deduction instead of the itemized deduction. Now, this is because the standard deduction gives all taxpayers an immediate deduction around $14,000 for single taxpayers or $28,000 for married taxpayers. So even if your medical expenses do exceed the 7.5% AGI threshold, it would have to exceed it by over $14,000 for this deduction to even be worth considering, unless you have other itemized deductions. But because of this, I don't spend a lot of my time thinking about the itemized deduction for my clients. Instead, I think about the following vehicles here. Number one, health savings accounts, also known as HSAs. So catch this, if you simply transfer money from your bank account to a health savings account before the end of this year, you will get a tax deduction for it. Then when you use the money in your HSA for qualifying health expenses, you pay no tax on the transaction. So in a sense, you are writing off expenses you already pay for, but instead using your HSA. And those qualifying health expenses are the same expenses that you could write off with the itemized deduction. Now, there are several health-related businesses that accept HSAs, like gyms, massage therapists, chiropractors, and so much more. Amazon even has an entire section of their store dedicated to HSA-eligible purchases. You can buy all types of health devices, gadgets, products, or services with your HSA. Except now you don't have to worry about the 7.5% threshold. regarding your income or competing against the standard deduction. The HSA tax write-off is on a completely different line item on your tax return, yet you can use it to pay for the health expenses you already incur. And unlike the itemized deduction, you get a deduction for simply contributing money to your HSA, not spending the money inside of it. So even if you do not have any health expenses right now or in the upcoming year, you could still contribute money to your HSA this tax year and receive a tax deduction for the amount that you contribute. And even if you do not spend the money in your account, it will just carry forward to future tax years. And you don't have to just let the money sit there. Most HSAs have investment options that allow your funds to compound into more wealth until the point where you need it. In 2023, individuals can contribute close to $4,000 to their HSA, and families can contribute close to $8,000. Now, there are some rules and requirements related to HSAs, so drop a comment below if you are interested in a more in-depth video about it. Now let's move on to the second tactic here. Number 2, write off your health insurance premiums. So if you are self-employed, you can write off your entire family's health insurance premiums under your business. Section 162 of the tax law allows self-employed individuals to deduct their health insurance premiums. It doesn't matter if the policy is in your business name, your personal name, or your spouse's name. If you are on the policy and you own the business and your household is paying for the expense, then the business can either write it off or reimburse you directly for the expense. Number 3, health reimbursement arrangement, also known as an HRA. An HRA is another way you can write off health expenses under your business, except this time it's not for insurance premiums. Now, technically, this is a fringe benefit that allows your business to pay for your health expenses, which is tax deductible for the business. Now, normally, benefits given to employees are included in their taxable income. But fortunately, the IRS allows health benefits to be tax exempt for employees. And since business owners are self-employed, you would get both the employer tax deduction and the tax-free benefit as an employee in your own business. My clients who do not have any employees absolutely love this strategy because it would solely benefit them as the only employee in their company. But even if you do have employees, be mindful that this benefit will apply to all of your employees, which could potentially increase your costs. Regardless though, an HRA is a great way to write off your health expenses under your business. But like with any tax strategy, there are rules and requirements to doing this correctly, which stretch beyond the scope of this video. So be sure to comment if you want to learn more about any of these strategies. And if you want to cut straight to the chase and get a comprehensive tax plan in your hands that is guaranteed to reduce your taxes, consider applying to work with me today at mycpacoach.com.